So I'm going to try to talk about cryptocurrency, where it came from, how it works, and why it matters, or why we think it matters. So I was a math and computer science major in college, and a lot of what drew me into that combined field was actually cryptography. Because a lot of modern day cryptography is based on mathematics. It's based on mathematical concepts that are very hard, they're very easy to verify, but very hard to actually do. When people think about crypto, or when they hear the term crypto, they think about something like this. This is the famous or the infamous German Enigma machine that the Nazis used during World War II to decrypt all of their wartime traffic, and that even more famously, the Allies in their Project Ultra in Bletchley Park used to decrypt all of the German traffic. So a lot of people, and this was Alan Turing, this was a famous thing, movies have been made about it. When people hear crypto, they often think it's about secrets. But actually, is crypto, in the context of cryptocurrency, is it about secrets? And the answer is actually no, it is not about secrets. In the context of cryptocurrency, it really means three things. It means that a currency cannot be faked. There's no alchemy. It actually turns out you can create gold. If you take mercury and you put it in a nuclear reactor, I don't recommend anybody try this. It's called nuclear transmutation. You can actually create and synthesize gold. It's much easier to do that than it is to actually fake something in cryptographic terms. The second thing is that records are real and immutable. You can't alter something. And the third thing that cryptographic security means is that the owner or signer is uniquely identified, so there's no impersonation. And as I mentioned, all of this is backed by real mathematics and computer science. The other term that gets thrown about a lot if you hear about cryptocurrency is blockchain. So what is blockchain? The Lucy, to use an anthropology term for you, of this space was Bitcoin. But Bitcoin was the face that launched 1,000 ships. This is often referred to as different things that are happening in blockchain. What is blockchain? Actually, I think it's a little bit helpful to talk about what blockchain is not. And I hope I won't cause any offense if anybody here works at IBM. But to do that, I'm going to use some help from my friends at IBM.
This is not a cloud. This is a tomato tracked from farm to table on a blockchain, helping keep shoppers safe.
OK, so that's not what a blockchain is. At least not how we use it. And every time there's a major movement, there often is a lot of hype. There is a lot of excitement around it. So I found this from The Atlantic a little while ago. In 1998 and 1999, it turned out if you were a public company and you added .com to your name, you didn't do anything else, your earnings didn't change, nothing changed, you just added .com to your name, your stock price would go up by 74%. So this was a pretty good trade. And now I just saw this a couple of weeks ago. There was a publicly listed company in the UK that added blockchain, and then its shares went up by 394%. Maybe this is what IBM was trying to do. But I shouldn't joke about IBM. So there is a lot of hype. There is a lot of craziness. There's Floyd Mayweather on his private jet with $100 bills pushing a cryptocurrency. There's my favorite, the first AI big data marketing cloud for blockchain. I don't even know what that means. It actually turns out when most people, and I think even that IBM commercial as well, when most people are talking about blockchain, what they're really talking about is this. And does anybody recognize this beautiful building with exactly, Oracle, thank you. So these 6 beautiful buildings with a lake in front or a little pond, and sometimes there's even, I think Larry's sailboat is out in front sometimes. This is Oracle. This is the world's biggest database company. Most people that are talking about blockchain, they're really looking for a database. And to understand the difference between blockchain and database, it's helpful to think about how transactions tend to happen. So a transaction, let's just say between Alice and Bob, generally there's a trusted intermediary. So if Alice is selling a Pez dispenser to Bob, might list that on eBay. If Alice is transferring money to Bob, might use PayPal. And it's not just transactions in the economic sense. There are also transactions in effectively a database sense. So whenever we want a consensus on facts, we use a ledger. So identity. Are you a citizen of this country? Yes or no? That is a fact that is stored somewhere. Do you have the ability to vote? That is a fact that is stored somewhere. So generally speaking, like if I'm trading property, I'm going to write that to the county registrar's office. That happens by means of a trusted intermediary. I use an escrow agent. The other way of doing this is to do it in a decentralized way. And blockchain is not meant to be cloud. It's meant to be a series of not intermediaries, but a series of effectively untrusted intermediaries on the internet that you don't know, and you don't have to know them, and it's not stored in one place. So to give you a sense of how this works for Bitcoin, again, I remember I mentioned that a ledger is a consensus on facts. A fact in the world of Bitcoin might be that Alice sends 4.87 Bitcoin to Bob and agrees to pay a small fee. Or another fact might be that Bill sends 3.23 Bitcoin to Chris and agrees to pay a very small fee. What happens in the world of blockchain is that there are nodes, think computers, people around the world that are competing to store this information. Now, why are they competing? I'll get to that in a second. But since we're in Las Vegas, I thought I'd use the metaphor here of dice. So everybody knows it's much harder to roll 2 6s than to roll a 7. It's even harder if you had to roll 1,000 6s concurrently. You'd be rolling dice for a very, very long time. What happens on a Bitcoin blockchain is that the very, very first, in this case, this is the first block that's written, is based on a set of facts, and then a bunch of nodes around the world are competing for the right to store that set of facts. Now, why are they competing? It turns out that if you win, just like in Vegas here, but if you win here, you get 12.5 Bitcoin. 12.5 Bitcoin right now is worth about $81,000. So the reason why people are doing this is to actually win money. Once that first fact is stored, a second fact emerges, and the first one becomes immutable. So block 1 cannot be changed. A, B, and D are the facts that everybody agrees on, and now people repeat that exercise for the right to store the second fact. In this case, it's F, G, and H. And this process continues and continues and continues. You can't change the past, but what you do is you earn the right to append to the future, and the winning node is the one that gets the 2 6s in my metaphor, and that becomes the set of truth going forward. So this is actually a much bigger effort than I could even possibly illustrate on a PowerPoint slide. So if you were to graph every country on Earth by energy usage, the 71st most energy-using country, so this is ahead of 120 other ones, is the 2 largest blockchain efforts of Bitcoin and Ethereum. This gives a sense of scale of how many computers are running this thing concurrently, as opposed to if you're storing something on a database at Dropbox or at Box or at Amazon S3, like that's one data center, maybe it's a handful of data centers. It's certainly not millions of computers running around the world. There was a paper that came out in 2008 by a pseudonymous individual named Satoshi Nakamoto. There's a lot of debate over who Satoshi Nakamoto really is. And Bitcoin actually wasn't anything new. It was a sum of 3 innovations. The first was something called Hashcash. And Hashcash came out in 1997, and the idea was to prevent spam by having the sender of a message do lots of computational work that takes about 25 seconds. So you want to have a hash where the first 20 bits of that hash are 0. And that took about 25 seconds on a Pentium in 1997, whereas for the recipient to verify that would take about a quarter of a second. So very, very easy to verify. This was meant to stop spam and be a form of money on the internet. The second thing was public key cryptography. This has been around for about 40 years, or more accurately, digital signatures. So think if anybody watches Game of Thrones, when somebody sends a raven and they stamp their little wax seal, you can uniquely identify that wax seal based on the sender. This is much more secure than the raven form. And then lastly, this idea of a distributed ledger. And distributed ledgers also aren't new. Even the domain name registry is effectively a distributed database. And rather than the dice that I mentioned, this is much more computationally intense. So there are about 2 to the power of 256. That's the number if you were to write it out in base 10. This is how many combinations there are. So this is not something that people can just wake up and hack very easily. Again, this is backed by all of the leading advances in computer science and mathematics as far as cryptography goes. And the really cool thing about this, as I mentioned, Satoshi Nakamoto came out with this thing in 2008. He owns about 1 million Bitcoin at a trading price of about $6,700 today, is worth about $6.7 billion. He doesn't even exist. Nobody can find him. He hasn't claimed his Bitcoin. He's a billionaire. He's not on the Forbes list, or maybe he will be this year. But the really interesting thing about Bitcoin is that it's rules without rulers. When you have a decentralized system, nobody runs Bitcoin. There's not somebody who's the boss of Bitcoin. There's not somebody who can unplug the data center or stop the effort. But there's a set of rules that people agree on that are working in this Bitcoin ecosystem. All that hopefully makes a little bit of sense, but what in the world does this have to do with money? Like how is this money, or why do people think it's money? So how did we come to believe in paper money? So this is an executive order from 1933. People thought that gold was money for a long time. The gold standard was kind of de facto. In 1933, by order of the president, you had to surrender your gold, and in return, you got pieces of paper. And people started thinking, well, paper is worth money because it's linked to gold. Eventually, about 40 years ago, that link went away altogether. And money is a very, very strange thing. I would posit that money has value if people think it has value. There are all sorts of examples throughout history of forms of currency being worth something and then being worth nothing. Bitcoin itself was meant to be an effort that would be a new currency. I would actually argue that this effort has not succeeded. it's much more akin to gold. So if you think about Bitcoin, today there are about 16.7 million Bitcoins existing. There will never be more than 21 million. This is part of the rules without rulers. It's also somewhat slow. So in order to confirm a transaction, every 10 minutes a new block is written. 12.5 Bitcoin are awarded. A set of facts are written to the blockchain. But you really want to wait about 6 blocks before something is truly permanent. So it takes about an hour for a transaction to happen. And even Fedwire is faster than that. But the true product market fit that seems to be emerging, and this is why there are millions, if not tens of millions of believers worldwide, is that compared to a traditional store of value like gold, or imagine that you're in Venezuela, do you want to store Venezuelan bolivars, or would you rather keep Bitcoin, which is near infinitely divisible, much easier to send? It's not heavy. Gold is actually very, very heavy. And actually, even more interesting for a lot of people, I think, in this room, Bitcoin gets a bad rep in that, oh, it's anonymous, it's used for drug dealers, it's used for bad people. It's actually much easier to track. So about a year ago, I had dinner with Bill Gates, and I was like, oh, this is my idol. What am I going to talk to Bill Gates about? We ended up spending the entire time talking about Bitcoin. And the reason why Bitcoin was so interesting to him is that now, as a leading philanthropist, if he gives $10 million somewhere, where does the money go? You can't track $100 bills unless you kind of try to find the serial numbers over time. Whereas Bitcoin, you can actually track every subsequent transaction from a Bitcoin wallet and when Bitcoin is sent. And it's really remarkable because if I put $10 million over here in Bitcoin, I can see where all of those coins end up in perpetuity. It's pretty remarkable as an economic theory. And going back to kind of money, why is this money? Is this actually money? A lot of money is absurd. This is a 100 billion mark from the Weimar Republic. You've probably seen this one before. It eventually became toilet paper. This is my favorite one. This is actually a gift from my co-founder at TrialPay. It was a $100 trillion Zimbabwean note. And I said thank you until I realized he was completely worthless. And again, if you think that Bitcoin is silly, I would turn your attention to gold being a little bit more silly. So the German Bundesbank just repatriated 50,000 gold bars worth $27.9 billion. And they did it 3 years ahead of schedule. So it was supposed to take about 7 years. It ended up taking, I think, 4. Actually, if you've seen the movie Die Hard 3, this is a plot where people want to go steal gold from the Federal Reserve Bank of New York. It turns out a plurality of the world's gold supply is not being worn by people in fancy jewelry and necklaces. It's actually under the bedrock of Manhattan. The Federal Reserve Bank of New York stores hundreds of billions of dollars of gold in vaults. They weigh you when you go in and go out to make sure you're not stealing anything. And somehow people believe that this has value. And I would posit that Bitcoin is no less absurd. And more people keep believing that Bitcoin has value, which of course recursively makes it true for them. But the real innovation of Bitcoin, in our opinion, is actually not Bitcoin. Bitcoin was the face that launched 1,000 ships. The way to think about a cryptocurrency is it's a new asset class that enables a decentralized application. The first decentralized application was Bitcoin for money. And the other part of this that's really important is that a blockchain, you'll hear a lot of companies talking about how we're doing a blockchain, but we don't like cryptocurrency. I very much believe this, and I think we all do as a firm. A blockchain without a cryptocurrency literally makes no sense because there's no incentive for the participants to host the blockchain. The reason why you need a cryptocurrency is so that you'll have hopefully millions of nodes, hopefully not that much electricity, but you'll have millions of people, millions of computers around the world that are agreeing to store a set of facts in perpetuity, and they're doing that for payment, and you don't want to just write them checks all around the world. They're getting paid in the output of the network. Which brings us back here. So there are a lot of projects here. Bitcoin was the first. What if you could expand Bitcoin to not just be money and not just be a store of value, because that seems to be a very limited use case. Not that many people use gold every day, but people use lots of other applications. Could they be decentralized? And this is where Ethereum came from. Think of Bitcoin as having a limited vocabulary. So the verbs of Bitcoin might be, I can send money, I can mine currency, I can serve as a host. The nouns are like a transaction happened. I sent this Bitcoin from me to you. I'm willing to pay this small transaction fee. That's effectively the vocabulary of Bitcoin. Ethereum is pretty much unlimited in terms of vocabulary. So unlimited verbs, unlimited data. So every node in the Ethereum network is running something called an Ethereum virtual machine that can actually process code. Ethereum script looks very similar to JavaScript. So here's something where I can say, all right, here are the rules for voting, or here's the rule for a majority. One of the cool things, you might have heard the term smart contracts. What you can do is you can actually send Ether to a contract, and then that contract, it's been written to the blockchain. You can't change it. So as an example, what if I want to go send money to a contract? Sounds like a very bizarre word. but the contract knows, and it's written in code, that once it receives that money, it will divide it up in 5 different equal segments and send it to these 5 other people. That is a smart contract. So Ethereum allows for unlimited verbs and arbitrary nouns to be stored to a blockchain. The reason why this is so interesting, and this is a company, or actually a protocol that we invested in called Filecoin. So imagine that you want to store information on the internet. There are 2 ways that you could think of doing this. The first is what Amazon did. They can spend billions of dollars in CapEx. They can build out something called S3, simple storage system, buy lots of hard drives, buy lots of racks, and then charge for admission and let you store your files there. The other way is that probably everybody in this room has 10 gigabytes free on one of their hard drives. Why don't you let people, random people, store information on your hard drive? It will be encrypted, and then you can store excess information that you might want to back up on other people's hard drives. It will be encrypted. They can't read it. How would you do that? Like, why would anybody do this? And effectively, this is what this idea of having a currency does. So the way that Filecoin works is that if I have a Filecoin, it gives me the right to actually utilize space on your hard drive. And if you surrender space on your hard drive, you earn a Filecoin. When Filecoin started, this is actually what an ICO is, an initial coin offering. They raised about $257 million, which sounds crazy, but because a Filecoin was denoted as being worth so much money, what did people do? They ran to Fry's Electronics. They went to Amazon. They bought hard drives. They're going to install them in their computers because they want to earn Filecoin. So it helps jumpstart the network. Another example of this is a protocol called Orchid. So there's a protocol called Tor, which you might have heard of. So imagine that you're a Chinese dissident and you want to access the New York Times and you can't go past the Great Firewall of China. There's a project called Tor where it connects you through a bunch of different machines. Going through those different machines, you can actually access the banned or blocked content. The problem is that there's very little incentive for those machines to do this. So a lot of people want to go read the New York Times. Not that many people want to be those little computers in the middle. And if you tokenize this, if you actually provide them with some value for surrendering not their hard drive space, but in this case, surrendering their network connection, you can jumpstart this network. So, it's kind of interesting. Like, even though I'm kind of the fintech guy and I think about things that have financial utility, think about networks in general. This is where cryptocurrency becomes very interesting because in a traditional, everybody, I think, agrees that networks become valuable when they get to scale. So eBay doesn't have that much value when there are only 2 people using eBay. Tinder doesn't have that much value when only 2 people use Tinder. But when these things have millions of people using them, they actually get immense value. And this is what we call the bootstrapping problem. Because generally speaking, the application utility of a network is very, very low when few people are on the network. Eventually, when lots of people are on the network, it's incredibly valuable. That's why Google is so valuable. It's why eBay is so valuable. It's why so many different companies are valuable when they get to scale. How do you jumpstart this? How do you solve this problem? And this is the interesting thing about tokens. What a token can do is that when the network utility, or rather the application utility, is low, so there are no hard drives to go store things on Filecoin, so why would I want to use Filecoin instead of Amazon S3? Well, I now see that Filecoin is worth a lot of money. I'm going to go to Fry's Electronics. I'm going to buy lots of hard drives. There's financial utility to me to participate on the network, even if there is not that much application utility because not that many people are on the network. And eventually, these curves have to cross. These are the protocols that make sense, which is they're using cryptocurrency. They're using this notion of a token that will appreciate in value, that is already have a very high value due to speculation, in order to jumpstart participation on a network. And this is what's really interesting, which is you can now monetize a protocol. So imagine that we invent the internet, not Al Gore, but everybody in this room, we get together, we invent the internet. How do we make money from our creation? So we invent TCP/IP, we invent HTTP, we invent SMTP, all these different protocols. Generally speaking, you can make money by building a fat client. So you build a web browser. I know somebody that did that. Or better yet, you build a proprietary network. So Facebook is a very large proprietary network where you join Facebook. They're using lots of protocols, but they're using the protocols as a means to an end to serve you ads and to target you. But now what you can do is you can publish the protocol, you can sell tokens, you can recruit participants and profit off of the protocol alone. So an example in the internet world would be, we invent the internet. How do we make money from our creation? Well, what if we say we're going to sell domain names? There will only be 21 million domain names. Why would you want to buy a domain name in 1991? Nobody's on the internet. Like, what point does it have? But you have some speculators that say, I'm going to buy pizza.com, that sounds kind of cool. I'm going to buy beer.com, that sounds kind of cool. As more people start using this internet thing, the domain names become more valuable. Or another example is IP addresses. There are only about 4 billion IP addresses because when the internet started, it was almost ludicrous that you would ever have a world where 4 billion people, much less devices, much less kind of IoT devices are on the internet. An IP address in the secondary market, because this is a token, it's kind of a, you need an IP address to connect to the internet, an IPv4 IP address. It sells for about $22. So the sum of IP addresses worldwide is now about $100 billion. It's kind of crazy. And this is a token for accessing these networks. Can you do this for more and more systems? People have tried doing things like Filecoin or Orchid before. They didn't work because of the bootstrapping problem and because they were done in a centralized way. Now you can do them in a decentralized way. And that's the thing that we find truly valuable. The takeaways that I'd love to leave you with, because there's a lot here, and Bitcoin often gets grouped in with everything else that's crypto, and then is that store of value, is that money? They're really two different things. I mean, Bitcoin, I give a lot of credit to it. I think we all do. It's both a store of value, or it's emerging as one, despite the fact that a lot of people disagree with that statement. But the more people that start agreeing with this, the more it does start looking more like gold, and it becomes a de facto reserve currency. But it's both a store of value, and it was the first thing that launched this idea of a shared incentive network. And our interest is really finding more things in new protocols like Orchid, like Filecoin from Protocol Labs, that this model can support. So thank you very much.